Okay, I have a declining balance depreciation demo. ABC Marketing recently purchased a machine that cost $80,000. The machine is expected to last 4 years and have a residual value of $6,000. Residual value means value at the end of the machine's life that we could probably sell it for. Residual value is a lot like salvage value. Calculate the depreciation expense to be recorded each year under the declining balance method. Well, first we need to know the formulas we need to use for this. The depreciation expense is calculated as the cost of the asset minus its accumulated depreciation to date, that quantity times the declining balance rate, or DB rate. The declining balance rate is equal to 2 times the straight line rate. For example, a 4-year life asset means that you're going to take 1/4 of the asset's cost per year in depreciation, which is equal to 25% per year using straight line. The declining balance rate then would be 25% times 2, or 50% per year. So the first year we're going to take the cost of $80,000 and subtract out 0 because accumulated depreciation from prior year in the first year of an asset's life, of course, is 0. So that net of $80,000 times 50% is $40,000 of depreciation expense in year 1. For year 2, we're going to take that accumulated depreciation, which is now the total of year 1's depreciation, and subtract that from 80,000. So 80,000 minus 40,000 is 40,000. That times 50% is 20,000. Now our accumulated depreciation for the end of 2 years is 40 plus 60, or 60,000. So our book value then is 80,000 minus 60,000, or 20,000. That 20,000 times 50% is 10,000. Now in year 4, the last year of the asset's life, that's where the declining balance method calculation is not done the same way. We have to take into account the residual value in the final year. Total accumulated depreciation cannot exceed cost minus residual value at the end. So here, $80,000 cost minus a $6,000 residual value will leave us with $74,000 of total maximum depreciation to be taken on this asset. So if I take $74,000 in year 4 and I subtract out the accumulated depreciation to date of $70,000, that's the sum of the 40, the 20, and the 10, I get $4,000. And then if you add up all 4 years depreciation, you come up with $74,000.